Hello and hi everyone. Our groups will present about the asset impairment MFRS 136. But before we start, let me introduce to you our group members. So, meet the groups. We have Abdul Mazid, Norman Hakim, Nadzirah, and myself, Fakihah. Our video presentation will discuss about 5 elements. The first one is introduction. The second one, impairment test. The third one is individual assets, NATS, cash generating unit, CGU. And the last one is reversal of impairment loss. For the introduction and impairment test, will be presented by me. Individual asset will be presented by Nadzirah, CGU by Mazid, and the last one for reversal will be presented by Norman Hakim. So, stay tuned. Alright, first thing we need to know is what is an asset impairment. So, asset impairment is amount by which carrying amount of an asset exceeds its recoverable amount. And I will explain to you what is actually the carrying amount versus recoverable amount. So, for the carrying amount is the amount at which an asset is recognized after deducting any accumulated depreciation, amortization, and accumulated impairment losses thereon. And for the recoverable amount is an amount of an asset or cash generating unit is the higher of its FVLCS, which is fair value less cost to sell, and its value in use, which is VIU. In case if you are wondering what is the difference between the depreciation and the impairment, so depreciation is depreciation of an asset would appear as a slow declining line over the time. And for the impairment asset reflects a drastic and often at one time and sudden reduction in the recoverable amount of an asset. Alright, now let's take a look for the MFRS 136, which is asset impairment. MFRS 136 was issued on November 2011 by the Malaysian Accounting Standard Board (MASB). MFRS 136 is equivalent to IAS 36 impairment of assets as issued and amended by International Accounting Standard Board (IASB). So, the objective of this MFRS is assets are carried at no more than their recoverable amount. If the carrying amount of an asset exceeds its recoverable amount through use or sale, as I mentioned before, it is said to be carried at value in excess of its recoverable amount. If is in this case, the asset is classified as impaired. We need to do the impairment for that asset. Alright, so I will explain to you what is actually the fair value, FVLCS, cost to sell, and value in use. So for the first one is fair value. Fair value is the price that would be received to sell an asset or paid to transfer a liability in an orderly transaction between market participants at the measurement date. The next one is FVLCS, is the amount obtainable from the sale of an asset or CGU in an arm's length transaction between knowledgeable, willing parties less cost of disposal. The third one is cost to sell. Cost to sell are deducted in determining a fair value. For example, is legal costs, stamp duty, similar transaction tax, cost of removing the assets, and more. And the last one is value in use. Value in use is net present value of the cash flows generated by an asset as it is currently being used by the owner. Alright, so we explain to you how to determining an asset of FVLCS. There are 3 levels to determining an FVLCS of an asset. The first one is best evident in binding sale agreement in arm's length transaction. Is there any binding sale agreement? No. If no, we move to the next level, which is the asset is traded in active market. But if there's also no active market to an asset, we move to the last one is best information available. Best information available is to reflect the amount that the entity could obtain at the end of the reporting period from the disposal of an asset.
Okay, and this is how we can determine the VIU of an asset. So the first one is we need to calculate the present value of the expected future cash flows from the asset or CGU, and then we need to figure out the correct discount factor once built value in use model. But for now, usually the company calculates the value used using the pre-tax cash flow and the pre-tax discount rate. Okay, this is an example question to determine VIU assets for ABC company. The question is on the left, and on the right is the cash flow table of the asset discounted at the discount rate. And at the end, we can see that VIU is 20.4 million. So the carrying amount is exceeds the VIU, so ABC company must recognize the impairment loss.
Did everyone know that not all assets we can impair at under MFRS 136? Alright, I will tell you what asset does apply to MFRS 136 and what the assets does not apply under MFRS 136. The asset that applied under MFRS 136 is property, plant, equipment (PPE), investment property at cost, intangible asset, goodwill, subsidiaries, associates, and joint venture at cost, and the last one is assets at revalued amount. MFRS 136 asset impairment does not apply to inventories, construction contracts, and more in the list. Alright, now I will share to you how the impairment of an asset were presented in the financial statement. So, we choose the Felda Holdings Berhad, FGV. So for the statement of profit or loss, FGV stated the impairment of non-financial asset on 2018 under the company is 1.957 million. So we go through to the notes to the financial statement, note 9. So, okay, for the note 9 is impairment of non-financial asset. As we can see, the total is same as the on the statement of profit or loss, which is 1.957 million. We choose, for example, is impairment loss on PPE and the company on 2018, which is 739,000. We can double confirm it, and we go to the notes to the financial statement, note 19, which is property, plant, and equipment. We can see that impairment of loss PPE on that notes to the financial statement is same and tally as stated at the impairment of non-financial asset on note 9. When should we test for an impairment? So under the MFRS 136, we will only test the impairment of an asset if there is an indicator. So the indicator is external sources and internal sources. So, what is external sources? External sources is observable indications that the asset's value has declined during the period. The second one is significant changes with an adverse effect, such as technological, market, economy, and legal environment. The third one is market rates increase during the period, and the last one is carrying amount of net asset exceed its market capitalization. So for the internal sources is the asset have a physical damage. The second one is significant changes with an adverse effect, such as asset becoming idle and plan to discontinue or restructure the operation to which an asset belongs. The third one is market rates increase during the period, and the last one is internal reporting of the company. Alright, in case you are not very clear about what I presented before, I will give you an example, a very simple example. So, based on the slide, ABC company has a vehicle with a carrying amount of $100,000 which has suffered physical damage. So, ABC company must do the impairment test because they have the indicators. The indicators is internal sources, as I mentioned on the slides before, which is they have suffered physical damage. Okay, according to the company's calculation, the vehicle has a net realizable value of $80,000 and VIU of $75,000. Before we task for impairment, we need to determine the recoverable amount. So the recoverable amount, as I mentioned on early presentation, is the higher amount of an FVLCS and value in use. So the recoverable amount for this vehicle is $80,000, which is higher than its VIU. However, that amount is still lower than the vehicle's carrying value of $100,000. Therefore, ABC company must record an impairment loss. So the impairment loss is $100,000 minus the $80,000, so the impairment loss is $20,000. So the double entry is debit impairment loss to $20,000 and the credit is asset, which is vehicle, $20,000. Alright, so we're done for the introduction part, and we will move to the second key takeaways of this presentation, which is impairment test. Alright, I will share with you the full guidelines to do the impairment test. So there are 6 steps to do the impairment test. The first step is we need to identify the asset within the scope of MFRS 126. The second step is we need to determine the structure of the impairment review, if the asset is reviewed individually or as a part of group, which is CGU. For the asset individual and the CGU, we present more by Mazid and Nadzirah. So we move to the third step, which is determine if and when to test for impairment. So as I mentioned in my early presentation, we will test for impairment if there is indicators. That applies for all assets. But according to GAAP, GAAP require the company to test annually, and if and when an indicator is identified for goodwill and intangible asset. Means we need to test impairment for goodwill and intangible asset annually, and if there is indicators. The fourth step is we need to estimate the recoverable amount. The recoverable amount is the higher of FVLCS and VIU. The fifth step is we need to compare the recoverable amount with carrying amount. And the last step is after we compare the recoverable amount and the carrying amount, we can recognize or reverse any impairment loss. The reversal of impairment loss will be presented more by Norman. Okay, now we will take a look for the impairment test of the goodwill. As I mentioned before, GAAP require all the companies to do the impairment test for goodwill and intangible asset annually. So for example, company XYZ bought company ABC. The book value of ABC company's asset is $10 million. But for a variety of good reasons, company XYZ paid $15 million for ABC company. Company XYZ recorded $5 million in goodwill as assets of the balance sheet. After the acquisition, ABC company's sales dropped by 40%. As a result, ABC company's natural market value fell to $8 million. A year has passed and company XYZ must compare the fair value of company ABC, which is their subsidiaries, with its carrying value of the financial statements of XYZ, including the goodwill. So, they realized that the fair value of company ABC differs from its carrying value. Company XYZ experienced an impairment. So, for the conclusion, company XYZ will compare the current fair market value of company ABC of 8 million plus goodwill of 5 million. The total is 13 million with the 15 million of carrying amount. The difference with the 13 million and 15 million is 2 million. As a result, the goodwill on the balance sheet decreased from 5 million to 3 million, and its total assets will fall to. Alright, for now we are done with the introduction and impairment test. Let's take a look for the next key takeaways of this video, which is individual asset. Individual asset will be explained by Nadzirah. So let's hear Nadzirah's explanation.
Thank you, Fakihah. But before we move on to individual asset, I would like to present to you an example of the Mudah income statement. As you can see in the slide, there is impairment of cost of investment, which is 285,000. And on the next slide, you can see on the notes of impairment of investment, Gamuda stated that they are using fair value less cost to sell to determine the recoverable amount in order to do impairment test. Meanwhile, for Masing Group Berhad, on the statement of financial position, they disclose PPE 242.21, and on the notes of PPE, Masing Group said they are using value in use to determine the recoverable amount in order to do impairment test. And next you can see the amount of impairment for PPE will be tallied on the notes 14. Property, plant and equipment, which is 3,908. Okay, let's move on to individual asset. Recoverable amount should be determined for the individual asset only if possible, but in most cases, company do not test individual asset for impairment because it is almost impossible to estimate the recoverable amount individually. So, most companies require asset to be combined into cash generating units. These cash generating units will be explained by my friends after this, but I need you guys to understand that the recoverable amount of an individual asset cannot be determined if the asset value in use cannot be estimated to be close to its fair value less cost to sell. For example, when the future cash flow from continuing using the asset cannot be determined. And the second one is the asset does not generate cash inflow. They are largely independent of those from other assets. In such cases, value in use and therefore a recoverable amount can be determined only for the asset cash generating unit. I will give you an example. A mining entity owns a private railway to support its mining activity. The private railway does not generate cash inflow that are largely independent of the cash inflow from the other asset of the mine. This means private railway is highly dependent on the mining activity. So from the example, you can see that it is impossible to estimate the recoverable amount of the private railway because its value in use cannot be determined. Therefore, the entity estimates the recoverable amount of the cash generating unit, which means they calculate the value of private railway together with the mining as a whole.
Thank you, Nadzirah, for the great explanation. So we move to the next key takeaways of this presentation, which is cash generating unit (CGU) that will be explained by Mazid.
Hi, Assalamualaikum. Now, let's take a look of CGU or Cash Generating Units. CGU is defined as smallest identifiable group of assets that generate cash flows that are largely independent of cash flow generated by other assets. The key points are the smallest identifiable group assets. Second, capable of generating cash inflows independently for other asset or CGU's asset. Let's see the example of CGU. The first picture is train. The train cannot generate cash inflow by its own. It would need the railway and the station to generate cash inflows. You see, a passenger need to pay the ticket once to utilize all of these assets to get to their destination. So, how do you determine the recoverable amount of CGU, or when do we need to use CGU? The determination of CGU is if it is not possible to estimate the recoverable amount of individual asset, entity shall determine the recoverable amount of CGU to which the asset belongs. So, what makes the recoverable amount of individual asset cannot be determined? The recoverable amount of an individual asset cannot be determined if the asset's value in use cannot be estimated to be close to its fair value less cost of disposal. Second, the asset does not generate cash inflow that are largely independent of those from other assets. The CGU usually be stated in notes to the account section in the annual report of the company. let's take a look of Gamuda's annual report. Gamuda is an engineering, property and infrastructure company based in Malaysia. It is one of the largest infrastructure companies. Their annual report stated that the group has recognized impairment in respect of its subsidiary Gibbs Property, Plant and Equipment of 148 million. The group carried out the impairment test based on a variety of estimation, including the value in use of cash generating unit to which the property, plant and equipment are allocated. The next example is from Brahim's Holding Berhad annual report. Brahim's business industry is a food and beverage industry that supplies most in airport and flight catering. These statements are from Brahim's annual report, page 86. Since the beginning of the financial year, the global economy, in particular the aviation industry, faces an uncertainty as a result of the unprecedented COVID-19 pandemic. The group has performed an impairment assessment on its cash generating unit in order to determine its recoverable amount based on its value in use. Hence, an impairment loss of 102.270 million was first allocated to goodwill and recognized in the profit or loss. The remaining impairment loss of 9.809 million was allocated to property, plant and equipment of the CGU. So, I think that's all from me. Stay safe.
Thank you very much, Mazid, for the great explanation about the cash generating unit, CGU. I hope everyone will understand it. So let's hear the Norman Hakim's explanation about the reversal of a loss impairment.
Assalamualaikum and hi, my name is Norman and now I will present a subtopic under asset impairment, which is reversal of impairment loss. So what is reversal of impairment loss? A reversal of impairment loss reflects an increase in the estimated service potential of an asset since the date when an entity last recognized the impairment loss for the asset. The entity needs to identify the changes that are causing this. Reversal is recognized when there is a change in the estimates to determine the asset's recoverable amount and a change in the estimate of the components of fair value less cost of disposal. There are two types of indicators of reversal, which is external indicator and internal indicator. For external indicator, the first one is an observable indicator that asset value has increased significantly during the period. Second, significantly favorable changes in the technological, market, economic or legal environment. The third external indicator is market interest rates decrease, which affect the discount rate used in calculating the asset's value in use. As for the internal indicator, the first is significant favorable changes in the extent to which an asset is used or the cost incurred during the period to improve the asset performance. The second one is evidence is available from internal reporting indicating the economic performance of an asset. The last one would be revenues are already covered by all expenses incurred. I will proceed with the allocation of reversal. The allocation is divided into three: individual, cash generating unit, and goodwill that I am about to explain. For the individual, the newly calculated carrying amount that has been reversed must not be higher than the original carrying amount. The reversal amount will be recognized in the profit or loss statement unless it is a revalued asset. The depreciation must also be adjusted first before calculating the new carrying amount. As for the cash generating unit, they are allocated on a pro rata basis, meaning they are allocated based on their contribution. The carrying amount must not be higher than the recoverable amount and the original carrying amount. For goodwill, there are no reversal allocated. This is because MFRS 138 Intangible Assets prohibits any reversal of impairment losses recognized on goodwill. Any increase in the recoverable amount of goodwill in the periods following the recognition of impairment loss for that goodwill is likely to be an increase in internally generated goodwill. Next, I will explain the reversal of an impairment loss for an individual asset. A reversal for the individual asset can only happen when there is a change in the estimates used to determine the asset's recoverable amount and cannot be reversed due to the passage of time or unwinding the discount. Reversal of an impairment loss is recognized in the profit or loss unless it is a revalued asset. Increased carrying amount due to reversal should not be more than what the depreciated historical cost would have been if the impairment had not been recognized, and the depreciation must be adjusted first for future periods to reflect the reverse carrying amount. Next is the step to recognize the reversal of impairment loss for an individual asset. Okay, the steps for reversing impairment loss for individual asset. The first step is there any indicator of impairment reversal for asset? If yes, then you have to calculate the recoverable amount of the asset, and you have to identify if the reversal of the impairment caused the carrying value to exceed the asset's carrying amount, had there been no impairment originally recognized. If yes, is the asset carried at a revalued amount? And if yes, you have to recognize the reversal in profit or loss to the extent that the impairment loss was previously recognized in profit or loss, and treat any excess as a revaluation increase. And the last one is to adjust future depreciation to allocate the asset's revised carrying amount. Okay, I will briefly explain the calculation example for reversal for individual asset. In this situation, the intangible asset costs 10 million ringgit and it is amortized over 20 years. 2 years after it is purchased, the intangible asset becomes impaired and it is written down from its carrying amount of 8 million ringgit to its estimated recoverable amount of 4 million ringgit. To calculate impairment loss, you have to minus recoverable amount from the carrying amount, and in this case it is 8 million ringgit minus 4 million ringgit, and then you will get impairment loss 4 million ringgit. And in the second situation is due to the shortages in the supply of properties, the directors determined that the fair value less cost of disposal of the property at the end of year 7 is 8 million ringgit. The recoverable amount of the asset has therefore increased to 8 million ringgit. The reversal of the impairment loss is limited to the amount that would restore the carrying amount to what it would have been had no impairment loss been recognized. And to calculate this is 7.5 million minus 7.5 million ringgit times 2 over 10 years, and then you will get 6 million ringgit, and therefore only 2 million ringgit of the impairment loss is reversed. Okay, next I will explain the reversal of an impairment loss for cash generating unit. When an impairment for cash generating unit or CGU is reversed, the allocation must be allocated to the pro rata basis with the carrying amount of the assets. The carrying amount of an asset shall not be increased above the lower of its recoverable amount and the carrying amount that would have been determined without any prior impairment loss. To reverse impairment loss for CGU, firstly, we must calculate the recoverable amount for the CGU to determine the amount of the reversal of an impairment loss for the CGU. And then we need to allocate the reversal of the impairment loss due to the individual assets of the unit, pro rata to the carrying amounts of those individual assets. And then you have to identify would the allocated reversal cause the new carrying amount of any individual asset to exceed the lower of its recoverable amount, and the carrying amount that would have been determined had no impairment loss has been previously recognized. And if yes, you have to limit the allocation of impairment reversal for that individual asset to the lower of 1 or 2, and allocate the excess that would otherwise have been allocated to the assets on a pro rata basis to the other assets of the unit such that no individual asset exceeds the ceiling as described. And at the individual asset level, you have to recognize in the profit or loss to the extent that the impairment loss was previously recognized in profit or loss, and then treat any excess as a revaluation increase and revaluation surplus for that asset. And then you have to adjust future depreciation to allocate the asset's revised carrying amount. Next, I will explain the calculation example for reversal for cash generating unit. In this situation, a railway company bought a new train in year 1. The cost of the train is 100,000 ringgit and the recoverable amount is 50,000 ringgit. And then a pandemic has hit the country, causing the maintenance of the train and railway track to halt due to no revenue during the period. And in year 2, the train and railway station are starting to operate, thus the recoverable amount will change to 40,000 ringgit, and the reversal amount will be 10,000 ringgit. That's all from me for the part of reversal of impairment loss. I will pass to the next presenter.
What a great explanation from Norman. Thank you, Norman. Before we end this video presentation, Nadzirah want to share the current issue and cases that related to the impairment of an asset. Let's hear to Nadzirah explanation.
Okay, next, I will explain to you on how COVID-19 impact the impairment test. So, first question, how COVID-19 is likely to impact the impairment test? As a reminder, recoverable amount is the higher of value in use and fair value less cost to sell. COVID-19 will often affect both amount. This is because fair value less cost to sell is the amount obtainable from the sale of an asset. Meanwhile, value in use is the net present value of cash flow generated by an asset. So, when there is COVID-19, there is likely the asset can be sold on a cheaper price, or the asset that in use cannot generate cash as much as without COVID. So, it will lead to higher impairment and loss to the company. For next question, is the COVID-19 an impairment indicator? Okay, it depends heavily on the dates of the reporting. On 31 December and below, COVID-19 was not considered to be a significant issue. But on 31 March 2020 and above, COVID-19 clearly need to be considered as an impairment indicator. Okay, third question is, what are assets that are likely to be impacted? Well, long-lived assets are likely to be impacted. This includes right of use asset arising from lease contract, property, plant and equipment, and intangibles. Okay, during COVID, this is the indicator that needs to be considered. We have external indicator and internal indicator. For external indicators, observable indicators of decrease in value and significant change with an adverse effect on the intensity. For example, during COVID-19, government prohibited the sector of entertainment and recreation. like karaoke and bowling to operate. This has adverse effect on the entity, and the carrying amount will be more than market capitalizations. For internet indicator, assets are becoming idle, and there is evidence that economic performance is worse than expected. For example, when the company prohibited the sector of entertainment and recreations, assets like games machine become idle, and there are plans to dispose of an asset and plans to restructure. Last one is the impact on the interim period. So maybe an indication that the impairment loss recognized in the prior period may no longer exist or may have decreased. For example, the company recognized impairment loss because they thought that COVID-19 is going to last longer in a few years. But next year, the COVID case is decreasing and a lot of sectors are opening again. So there is an increase of recoverable amount. So in this case, an impairment loss recognized in prior period for an asset other than goodwill should be reversed. Okay, moving on to the next slide. This is the example of the company that is highly affected by impairment caused by COVID-19. So City Development Limited is a Singaporean multinational real estate operating organizations, and their joint venture partner is a Sincere Property Group that is in Malaysia. So what happened in CDL? It records that 1.78 billion impairment on Sincere Property Group, declares 1.92 billion loss for financial year 2020. This significant loss was due to the group decision to write down 93% of its total investment in Sincere Property Group, which amount to $1.78 billion. The group says that the loss has distorted the group result from the second half financial year 2020 and financial year 2020. So why they do that? This is because during the pandemic, Sincere Property Group has made an impairment loss of 33.9 million on its hotel properties, and in first half financial year 2020. And also because of pandemic, China made a 3 red lines policy to cap borrowings for real estate developer. So this gives a lot of pressure to the company. And lastly, in second half financial year 2020, CDL record additional impairment losses of 53.6 million and 12 million on its property, plant and equipment, and investment property respectively.
So that's all from us. Thank you for lending your ears and spend your time to hear our explanation about the asset impairment. Till we meet again, bye.